Okay, let's talk about something truly terrifying. Imagine your money just poof vanishes. It's not stolen, you didn't spend it, it's just stuck somewhere in the digital void. It sounds like a tech nightmare, right? But what we're going to explore today in Nigeria shows that this is a deeply, deeply human problem. You know that feeling, right? That little jolt of panic? Well, for millions of people in Nigeria, this isn't just some rare glitch. No, it's a daily high-stakes gamble, and it's really shaking their trust in the entire digital economy. So let's set the scene. We're on a busy street in Kano, Nigeria. You've got a point-of-sale agent, a POS agent, and a customer, and they're locked in this really tense standoff. Why? Because the little machine says transaction failed, but the customer's phone is screaming that the money has already left their account. And that one phrase, that's heard countless times every single day all across the country. It's basically the epicenter of this huge fault line running right through Nigeria's digital payment system. It's that exact moment where technology and trust collide, and trust starts to crumble. Okay, so to really get why this one failed transaction is such a big deal, we have to zoom out a bit. We've got to look at the bigger picture here, which is Nigeria's massive, ambitious push to become a cashless society. Think about it this way. Digital payments in Nigeria aren't just a nice-to-have anymore. They're not a convenience. They're critical public infrastructure, just like roads or the power grid. It's absolutely essential for daily life, for business, for everything. So as the country races toward this digital future, the reliability of these systems, well, it's literally everything. So the big question is, when this supercritical infrastructure fails, who actually pays the price? Well, you might think it's the big banks or the tech companies, but no. The burden, the real cost, falls squarely on the shoulders of the people right there on the front line. And these are the two groups who get caught right in the middle of this mess. On one side, you have the POS agents. Their working capital, the actual cash they need to run their business, is just frozen, stuck. And on the other side, you've got the customers who see their hard-earned money trapped, which you can imagine creates a ton of anxiety and a deep, deep sense of distrust. A POS agent named Musbahu really hits the nail on the head. He says that for agents like him, a system failure isn't just about losing money. No. It feels like a personal accusation of theft. They're the one the customer sees, so they become the human face for this completely faceless technical glitch. And then you have customers like Ismail. He had to wait over a month to get his money back. Can you imagine? Experiences like that create this really deep-seated fear. And that fear, it just poisons their trust in the whole idea of digital banking. It makes them second-guess every single time they go to make a payment. And this is where it gets kind of maddening. Look at the inconsistency of the system. You have two agents here, Sulaiman and Musbahu, and they're using the exact same platform. For Sulaiman, things are pretty smooth. Reversals happen in minutes or hours. But for Musbahu, a single transaction was stuck for more than a month. Seriously, how can anyone possibly run a business with that level of unpredictability? Okay, so with all this chaos and confusion on the ground, you have to wonder, what are the actual rules here? What's supposed to happen? And why is the reality on the street so wildly different from the official policies that are probably written up in some nice air-conditioned office? Well, the official rules laid out by the Central Bank of Nigeria are actually crystal clear. Banks are given just 24 hours to reverse a failed instant transfer. For a failed POS transaction, they get 48 hours. That's it. It's all supposed to happen quickly and without any fuss as soon as a complaint is lodged. And get this. There are supposed to be real consequences for not following these rules. Banks can face a penalty of 10,000 naira for every single transaction that isn't sorted out within those official timelines. So the deterrent is definitely there. At least, it is on paper. But here's the reality check, and this comes straight from a bank employee on the inside. He basically confirms that the whole process can take at least 5 working days. That's way, way longer than the official 48-hour rule. And it's right in that gap, the gap between the rulebook and reality, that all this frustration and anger just builds and builds. So let's break down what this actually means. There's a central organization called NIBS, the Nigerian Interbank Settlement System. Their entire job is to watch over all of this stuff. They're the ones who see the transaction failures, they're the ones who monitor the reversal timelines, and yet, even with this official body watching everything, the delays just keep happening. It just leaves both the agents and the customers stuck in this awful limbo. This whole mess isn't just about a few people being inconvenienced or frustrated. It's much bigger than that. It's actually a direct threat to one of Nigeria's most important national goals, achieving financial inclusion for every single citizen. Think about it. Every single time a transaction gets stuck, especially for low-income folks where every last naira counts, it erodes the very trust that this whole system is built on. It does the exact opposite of what's intended. It pushes people away from digital payments and right back to what feels safer, good old physical cash. So what's the fix? What's the solution here? Well, experts are saying it really boils down to a lot more transparency. We need public reporting so everyone can see which banks are dropping the ball the most. And, absolutely crucially, we need real tangible protections and maybe even compensation for the POS agents who are left holding the bag and bearing the financial brunt of all these system failures. And that quote right there, that's from Yahaya, the customer we heard from earlier. And it just perfectly captures the human cost of all this. What is at its core a systemic failure, it becomes a deeply personal burden. It's this heavy weight that individuals are just forced to carry all by themselves. And that really leaves us with a powerful and pretty uncomfortable question. And it's not just a question for Nigeria, but for the future of digital finance everywhere. I mean, if all of our new, sophisticated financial systems just end up shifting all the risk onto the shoulders of the most vulnerable users, then you really have to stop and ask, who are we actually building this future for?